Hello investors and welcome to my YouTube channel where I study the best investors and businesses from around the world. Today we'll be looking at Micron and why Monish Pabrai and Li Lu invested in Micron. A brief note, this is a long video with an extreme deep dive into Micron. This does take a long time for me to research, so please share this video if you found it valuable. The video will be broken into 4 parts. Number 1, what does Micron do? Number 2, what is the bearish case for Micron? Number 3, what is the bullish case for Micron? Number 4, why Monish and Li Lu are optimistic about Micron. Let's first get into what Micron does and its current style of business. Section number 1, what does Micron do? Micron Technology is a memory and storage technology company that develops and manufactures products for use in personal computers, networks and data centers, and the automotive industry. The company produces memory cards, drives, and infrastructure technology under its various global brands. DRAM and NAND flash memory chips are Micron's 2 main revenue-generating products today, despite the fact that it has historically produced 4 different types of devices. DRAM products are a low-latency dynamic random access memory semiconductor devices that provide high-speed data retrieval while exhibiting a variety of performance characteristics. DRAM products are most commonly used in the client, cloud server, enterprise, networking, graphics, industrial, and automotive markets, and lose content when power is turned off, or volatile. Low-power DRAM, or LPDRAM, products are sold in the smartphone and other mobile device markets, as well as in the automotive, industrial, and consumer markets, and are engineered to meet performance and power consumption standards. NAND storage devices are non-volatile, rewritable semiconductor storage devices that offer high-capacity, low-cost storage with a wide range of performance characteristics. NAND is used in enterprise and cloud SSDs as well as client and consumer SSDs and removable storage. Smartphones and other mobile devices, as well as consumer, automotive, and embedded markets, use managed NAND automotive surveillance, machine-to-machine automation, printer, and home networking all benefit from low-density NAND. 3D XPoint is a new non-volatile memory and storage technology that sits between DRAM and NAND in a memory and storage hierarchy, with higher capacity and non-volatility than DRAM and lower latency and endurance than NAND. Data centers and other markets that require high bandwidth storage and low latency performance will benefit from 3D XPoint technology. Micron has announced that it will sell its Lehi, Utah-based 3D XPoint fab in the end of 2021. NOR products, or non-volatile rewritable semiconductor memory devices, provide fast read speeds. NOR is ideal for automotive, industrial, and consumer applications because it is commonly used for reliable code storage, or boot applications, operating systems, and execute in place code in an embedded system, and frequently changing small data storage. But again, like I stated earlier, DRAM and NAND are the 2 main device types to focus on here. Micron derives 97 to 98% of its business from DRAM and NAND. These are basically the memory components in your computer and other devices. DRAM manages your data while NAND stores it. Micron breaks down its revenue and operating profit into 4 major categories: Compute and Networking, Business Unit, CNBU, Mobile Business Unit, MBU, Storage Business Unit, SBU, and Embedded Business Unit, or EBU. Computer and Networking Business, CNBU, their most profitable sector includes memory products and solutions sold into client, cloud server, enterprise, graphics, and networking markets. CNBU reported revenues of $9.18 billion in 2020, $9.97 billion in 2019, and $15.25 billion in 2018. These are the main high-volume runners at Micron as of 2021. 1X-NM DDR4 and 1Y-NM DDR4. And in terms of node sizes, 1X equals 16 nanometers and 19 nanometers, 1Y equals 14 nanometers to 16 nanometers, 1Z equals 12 nanometers to 14 nanometers. The next high volume runners are said to be 1Z nanometers, the DDR5 in 2021, as well as the 1 alpha nanometer node. Mobile Business Unit, or MBU, the Mobile Business Unit is a key segment for Micron that includes DRAM, NAND, and NOR flash products meant for smartphones and tablet markets. Storage Business Units, or SBU, it includes NAND flash components and SSDs, or solid-state drives for clients, enterprise, cloud, and removable storage markets. Embedded, EBU, this segment includes DRAM, NAND, and NOR products for automotive and industrial applications. Section number 2, Bearish Case for Micron. I'll go over the 5 bearish cases for Micron. Number 1, inflated demand due to lockdown. Number 2, price wars. Number 1, international manufacturing dependencies, trade tariffs. Number 2, competition. Number 1, cyclicity. Let's get into the first point. Number 1, inflated demand due to the lockdown. Despite the fact that the global semiconductor shortage may not be over, companies are increasing their investment in product capacities. Over the last few quarters, a global chip shortage caused by increased demand from the consumer electronics industry and supply-side disruptions has impacted the production of a variety of products ranging from cars to computers. This short supply will inevitably lead to an oversupply for manufacturers, and semiconductor fabs will be forced to cut costs to get rid of inventory once there is an oversupply. In fact, CEO Sanjay Mehrotra attributed the increases in guidance from current demand from home and office computing during the conference. Companies have realized that a large number of employees are perfectly capable of working efficiently off-site, allowing them to save money on office space. When the lockdown is lifted, demand may return to previous levels. During the lockdown, the mobile gaming market exploded, but this may not last over the lockdown when people want to either go out and travel or be called back to work. Number 2, price wars. There are 3 key players left in the DRAM memory business: Micron, SK Hynix, and Samsung. The left shows DRAM space, while the right shows the NAND memory storage market share. You can see from the left DRAM pie chart, there are only 3 players left in the game. When there are only a few players, it resembles the commodities business, and it becomes a price war, with the companies undercutting one another to get to the lowest price, which, of course, eats into the profit margin. Some of their competitors may use aggressive pricing to gain market share and take business away from their most important clients. Customers may also choose to do business with competitors as a result of government policy, national preference, or other factors. Number 3, international manufacturing dependencies and trade tariffs. According to a report published by Boston Consulting Group in 2021, the semiconductor industry will need to invest about $3 trillion in R&D and capital expenditure globally over the next 10 years to meet rising demand. This isn't currently possible, so there are significant reliance on other countries. Even a cursory glance at Micron's most recent 10K reveals a significant operational reliance on countries other than the United States. Increases in tariffs and other trade restrictions or taxes on their customers' products, equipment, or supplies could hurt the business. Micron has a 29% market share in the memory business in the United States, as you can see, while geographic specialization has been beneficial to the industry. It has also created vulnerabilities that each region must evaluate in light of its own economic and security concerns. There are more than 50 points in the supply chain where one region controls more than 65% of global market share, though the risk associated with each one varies. Products shipped to consumer locations outside of the United States accounted for 88% of their revenue in 2020. Micron also buys a lot of equipment and supplies from companies that aren't based in the United States. A significant portion of their facilities are also located outside of the United States in Taiwan, Singapore, Japan, and China. Tariffs and taxes have been imposed on certain goods by the United States and other countries. Since 2018, general trade tensions between the United States and China have been rising, with the United States imposing tariffs on Chinese goods and China retaliating with tariffs on American goods. Some of their products are included in these tariffs. The dilution of Hawaii contract with Micron is a perfect example of this. They are exposed to risk related to our international sales and operations, which could have a materially negative impact on their business. In fact, products shipped to customers outside of the United States accounted for 88% of Micron's revenue in 2020. Number 4, competition. Micron faces intense competition in the semiconductor memory and storage markets from a number of companies, including Intel, Kioxia Holding Corporation, which is formerly Toshiba Memory Corporation, Samsung Electronics, SK Hynix, and Western Digital Corporation, which, of course, the main threat being Samsung and SK Hynix. When comparing Micron with Samsung and SK Hynix, we don't currently see Micron having a large edge when compared to other memory companies. This shows the projected P/E for the different memory companies, but take this with a grain of salt since several speculative factors are considered here. Interestingly, Micron has a higher P/E compared to its peers, which suggests growth is factored into the Micron share price. If we zoom out and we take a look at the industry overall and compare Micron to see that Micron hasn't seen the same uplift as other semiconductor companies. Adding to that, some governments, such as South Korea or China, may provide or have provided significant financial or other assistance to some of their competitors or new entrants and may intervene in support of national industries and competitors. Number 5, cyclicity. The cyclical memory market booms and busts drive investors' sentiment in Micron stock. Micron's business may be harmed by the volatility and average selling prices for semiconductor memory storage products. They've seen a lot of volatility in their average selling prices, including some dramatic drops, as shown in the table below in the recent 10K, and they might continue to do so in the future. The memory industry has all of the hallmarks of a highly cyclical industry. Memory chip production requires a lot of capital, and because the product is essentially a commodity, the price is largely determined by demand and supply. If we imagine a memory market in equilibrium, high demand growth pushes the market out of equilibrium, resulting in higher prices and margins, which encourages higher industry capex to keep up with the higher demand. This increased capex will result in increased oversupply, lower prices, and lower capex, kicking off the next cycle. Section 3, bullish case for Micron. I'll go over the 2 bullish cases for Micron. Number 1, the emergence of an oligopoly. Number 2, factors and growth of the future. Let's take a look at the first point. This section of the video will cover 2 eras of the memory landscape as described by Sunil Shah of Seeking Alpha in his fantastic write-up, and I'll be talking about that as well as other research on the company here. Number 1, the emergence of an oligopoly. This consolidation in DRAM has been extreme, with just 3 players now accounting for 97% of global DRAM demand, displacing a dispersed group that accounted for about 25% of the market in 2008. The formation of this oligopoly is crucial to comprehending the current situation. The old era of memory. From 1997 to 2017, an industry ripe with innovation and ferocious battle for survival among numerous suppliers, each vying for a spot in the future, can be seen. The rapid rise in demand for both NAND and DRAM signaled a bumper crop for digital gunfight survivors. The price of admission, however, was a sizable R&D budget in order to stay technologically current in the fast-paced industry. Every year, huge cost savings were made possible by quantum leaps in memory design and manufacturing. Because technological advancement was so rapid, if a supplier didn't get their inventory out the door in one quarter, it was practically worthless the next. Because another supplier, who had kept up with the digital beat, offered a better product at a lower price. As a result, if inventory was not sold within weeks, it became obsolete, leading to a dramatic culling and survival of the fittest. Only a few people survived because of natural selection. Since 2001, a dozen suppliers accounted for 1/3 of the market have gone out of business, leaving only 5 players accounting for 94% of the supply. In DRAM, the consolidation has been more extreme, with 3 companies now controlling 97% of the global market, displacing several smaller companies that accounted for about 25% of the market in 2008. The golden era of memory, 2017 and onward. That story brings us today, arguably the golden era of memory, when a small number of DRAM and NAND players are finally able to reap the benefits of massive legacy investments in intellectual property patents and know-how, as well as cutting-edge manufacturing capacity. The longer life of inventory is a critical issue as we enter the age of slower marginal improvement. A longer inventory shelf life is a corollary of a slower rate of cost improvements, which is still only partially recognized by investors. The best way to convey this industry paradigm shift is with a long-term graph of inventory and profit margins over time, as shown in the Sunil Shah of Seeking Alpha and his amazing write-up. The profit margin is plotted in the y-axis, while the x-axis is measured in years. The blue curve represents the outstanding Micron days of inventory. The gross profit margin is highlighted in orange, while the operating profit margin is highlighted in gray. Since 2017, Micron has been profitable even when the market is down, and from 2017 and beyond can be considered the memory industry golden age. Micron's operating margins used to plummet whenever inventory approached 80 days, and it would frequently lose money as it dumped worthless, obsolete inventory. The inventory dump would occur in that quarter or the quarter following, and impairment accounting recognition. Investors assumed that approaching 100 days of inventory would result in a massive impairment and losses as it had in the past. The bullish case is that due to the demand, there should be no more losses even in the downward cycles. Factors for growth and the future. Factor number 1, 5G and mega memory phones. 2 secular drivers in memory are 5G networks and the increased need for memory at the consumer interface in applications involving AI and real-time data processing, e.g. navigation and image recognition apps. In fact, the CEO, Sanjay Mehrotra, summarized at the press conference, 5G is going to be a long, multi-year growth cycle for smartphones. It will reignite the smartphone unit sales, and 5G also drives increased content for memory and storage. So when we look at longer-term trends, 5G will be a significant growth driver for multiple years in terms of increased unit sales, as well as increased content for both DRAM and NAND. Factor 2. Data centers and cloud. A major contributor was data centers, which saw a surge in the number of businesses moving to cloud. As demand for data servers soared, many cloud providers, alarmed by the rise in DRAM, began to pre-order. Memory products are also in high demand, and this trend is expected to continue in the server market. Devices that rely heavily on memory include mobile phones, cloud computing, and servers. Factor number 3, the next DDR5 is the high-volume runner. DRAM market is currently transitioning between generations. On the other hand, significant increases in DDR5 PC DRAM penetration aren't expected until 2022 at the earliest. Despite its low-cost current penetration rate, next-generation DRAM is expected to become a high-volume runner in the coming years, as shown in this table here. The expected improvement in DDR5 is depicted in this diagram. Lower power consumption and better power management are two advantages of DDR5 as demand grows. The integrity of the signal, the efficiency of memory, and the capacity of the system are all important considerations when compared to DDR4. Micron reports a 163% increase in speed and 300% increase in density. There's an excellent report by Shane Rao and Soo-Kyun Kim about the advantages of DDR5 over its predecessors. They conclude that technology buyers will demand disparate solutions from technology providers, yet while scaling to meet disparate workload requirements, DRAM must remain standardized and scalable for industry to remain economical. DDR5 reflects the increasing demand for performance, power, and other requirements in servers. Beyond servers, DDR5 must blaze the path for future applications, PCs, game systems, and more, to be supported too. DDR5 will be essential to meet the average server's DRAM needs by 2023. From this table, from their work, it's clear that DDR5 shows drastic advantages in bandwidth, low power, better power efficiency, and scalability, as well as higher memory efficiency and lower latency. There is a higher memory efficiency and higher capacity in memory modules. The ability of dynamic random access memory, or DRAM, to adapt to increasingly specialized real-time memory requirements of applications that use it to define its history. Servers, which are at the heart of cloud computing and artificial intelligence, or AI, have been demanding more and more from their DRAM since around 2010, including improved performance, latency, power, capacity, reliability, and cost. There are numerous reasons why semiconductor demand is expected to grow at an unprecedented rate, according to a variety of sources. This graphic from the Lam Research Investors Day nicely captures the industry's zeitgeist. It's pretty much what you'd expect. Semiconductors are used in almost everything that has to do with technology. We are generating more data than ever before, training better artificial learning/machine learning models than ever before, and using more stuff that collects, sends, and receives data than ever before. Thanks to the rollout of 5G, the Internet of Things is built on this foundation. Autonomous vehicles, deep learning, robotics, industrial automation, data center demand, cloud computing, AR, VR, and cryptocurrencies are all improving. Section number 4. Why are Monish Pabrai and Li Lu invested in Micron? Current holds of Micron from Li Lu and Monish Pabrai from their American holdings is close to 50%. Although I don't talk about Li Lu much on this channel as an investor, Li Lu is one of the world's best-kept secrets, a hugely successful value investor producing very large market-beating returns year after year. A $1,000 investment with Himalaya Capital and Mr. Li Lu would yield a total return of $321,000 over the same period compared to the $6,600 for the S&P 500. It's no surprise that Charlie Munger has entrusted Li Lu with his own money. Charlie Munger has previously stated that he prefers to work with people and businesses that can be dropped into an entirely new country and environment with no resources and still make a fortune. It's easy to see why Charlie Munger chose Li Lu to manage his money after learning about his investor background ability to thrive in a foreign environment, outstanding results, temperament, discipline, and outlook. Unfortunately, it wasn't able to find Li Lu's lectures or interviews where he discusses his Micron conviction, but all we know is that he has 50% of his holdings in Micron when looking at just his investments in the United States. Monish Pabrai is the opposite. He's very lenient with his time and offers sage advice. So from this, I understand two things. Number one, he's bullish on Micron since he sees growth in data centers and cloud. Number two, it's not a forever hold company since it does have cyclicality. Specifically, at the 2019 annual meeting, Pabrai said, "We paid about $38 or $39 a share, which I thought was a great price. And by the 22nd or 23rd of December, it was at about $29 a share. I had three choices. One was to do nothing. The second was to sell Micron and then buy it back in 31 days. Or the third was to sell Micron and buy an SK Hynix." As he explained, SK Hynix was, alongside Micron, one of the three leading players in the memory business. The other one was a Samsung, which was not really a pure play. This suggests that Pabrai entered Micron following his belief that the entire memory sector was undervalued. He's unlikely to ever invest in a sector he does not understand, so if he bought Micron on valuation alone, it's unlikely he would have then gone on to buy SK Hynix. The trade indicates that he knew a lot about the business and wanted to make the most out of his knowledge. These comments also indicate that while there were other ways to play this sector, Pabrai chose Micron for its value. In fact, he has revealed in a recent interview that he discovered the stock while searching through the publication value line. He said, "So I noticed this very low P/E, and then the fund manager friend of mine mentioned that he owned the stock. And so I said, okay, this person isn't exactly an idiot. So why don't I drill down and just see what's going on with Micron?" And when I drilled down, I decided it was worth taking a position. The friend here might be Li Lu, who has a 50% stake in Micron in his USA holdings. We can determine from these comments that Li Lu and Pabrai both like the sector the company operates in and likes the company for the value it offers. It's unlikely that he would invest for any other reasons. I'd love to hear if you're bullish or bearish about Micron, and if you missed anything on the stock, I'd love to hear your thoughts about Micron. I currently don't hold any positions in Micron, nor am I affiliated with the stock. Let me know if you think I should buy it. I know this was a long video, and thank you for watching this video entirely to the end. Nothing helps this channel out more than y'all sticking out to the end. Thank you again, and please consider subscribing to my channel if you haven't already done so. Also, if you enjoyed this video, please like this video and subscribe to my channel so that I can continue to make videos like this for you to enjoy.